What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis on our broad market, our core list of companies, and this week I've got 7 trade ideas to share with you towards the end of the video. Some of these ideas came from Discord members, so if you want to chat with myself and other traders in real time, definitely check out those links down below in the description. That being said, there's no fancy intro to roll this week, so let's get into the charts. Jumping right into our SPY weekly chart, talking about candle structure and location as we always do. For structure, certainly a bullish candle, a tiny little lower wick on that thing, but a solid close into the end of the week there at all-time highs, which of course brings me to my next point, location. New all-time high close, and if you look at where that lower wick was, it never even violated the body of the prior week's candle. So, all things good in terms of structure and location. One thing I would want you to notice is just how compressed the range is as we're moving into all-time highs. And again, there's nothing wrong with that. It's just not typically what you want to see as you're venturing into uncharted territories. You want to see some expansion of range, some price exploration for a true bullish move to be underway. Again, it's not the end of the world. It doesn't mean it has to come tumbling down. It's just not the ideal scenario. What else would I like you to know about the weekly? Well, that would be this here. So resistance trendline, we're kind of right at it. We're butting our heads up against it. We have been for quite some time now. It's not the end of the world. Again, doesn't mean we're going to roll over, just something to be aware of in terms of weekly location. And then the flip side of that coin, of course, are the weekly trend lines that we've been looking at for quite some time now. If you do this one from here, getting a little extended from it. Again, it doesn't mean it has to roll over. We are well above the support trend line. And we can even do something like this, right? We've been looking at this one for some time as well, noting that this is our anchor point here. We get touch one on that lower wick. Got into it here and supported here as well. We are slightly above that too. So all things good in terms of the weekly uptrend. Last thing I would make your attention to is the volume down below, slightly tapering off. And again, it's not the end of the world, but typically as you're moving into all-time highs, as you're seeing range expansion, typically on a nice move to the upside, you want to see volume be a little bit better than that. So all things to keep an eye on. None of them are shouting that we need to roll over here, but it's probably not the most risk-friendly entry for any type of new longs in this marketplace. Drilling down to the daily now to talk about tradable levels into the upcoming week. And I think what we'll find is the story is very similar to what we just kind of outlined there. Buying up here at our doubling of the range fulfillment target, 446, is just not optimal in terms of risk management, right? Technically, what we've discussed is here is your range. When you break out, what you like to see is a doubling of that range, and that gave us that 446 target to the upside. Now that we've gotten there, we should start to be on the lookout for any types of pullbacks, right? Any sort of digestion of this move higher. So what are the levels to be watching out for if we roll over? Again, that's if. Well, the first one needs to be here at 442.89. In the ES, this equates to 44.30, which if you've been in the Discord, we've been talking about that area acting as a magnet. You can see it was the top end of this 3-day balance, and then it acted as a perfect double bottom. So please have that on your radar here in the S&Ps. If we pull back into that area, monitor it very closely. If we get any consolidation just above and fail to really bounce out of it, it should break on the next test, right? So if it gets tested once, twice, 3 times, fails to move higher, boom, look for that to break if it's revisited one more time or something of the sort. After that, the top of the 10-day balance here at 441.10 should be the next up on your radar, right? And simply that's because prior resistance should offer support when tested from the top side down, and that would also coincide with a nice new higher low, right? So if this is a higher low from this major low back here from the daily, this would also be a higher low. And in terms of keeping the daily uptrend intact, that would be just fine. So those are the 2 make or break levels I believe that we should be watching out for in the S&Ps into the upcoming week. Underneath that, I would argue we probably come down here to 438 and then fill the tiny little gap underneath there around 436. Again, remember, this is not a trade to take here. This is just going to act as a target. We talked about downside levels because we need to discuss risk here, but again, nothing about this chart is screaming that it needs to roll over. So as we move, if we move into new all-time highs as well, you're just playing whole and half dollars any intraday levels that do form. Jumping over to the Qs now, this is where things start to get a little bit interesting because we can start talking about divergence, right? As the S&Ps were making new highs this week, widely driven by the financial sector, the tech sector was actually cooling off a little bit. So pretty much all sideways, closing right where we started, in the earlier parts of the week, just below the all-time highs here, close to 369. So obviously, just like the S&Ps, if the S&Ps bring them higher, you're looking for whole and half dollars intraday levels that do form. But if the S&Ps pull back here, here, then I wouldn't be surprised to see the Qs actually roll over to the bottom end of their range here at 362.67, right? There's strong support in here. I would expect a first touch bounce, but just like we discussed with that S&P level, if we get down into it and then maybe consolidate for a couple of days just above, if it's tested one more time, look for that to break. And looking left here, there's not a whole lot of candle structure in this general mess. So I would watch out very closely. 50 SMA, the blue line on the chart there, currently trading at 356.34. That might act as an intermediate support simply because if you look back, it's been some time since we've tested the 50 SMA here in the Qs. And generally, if you haven't tested it in a while, if you're coming into it on, after making new highs, it should act as support. So keep the 50 SMA in mind. If we break 362.67 after that, the bottom end of the range here is at 355.20. Given the compression of this range here, in my opinion, right, this is more of an opinion piece as opposed to a technical piece. This is building energy, right? The more consolidation, the more anticipation as we get breaks out of this range, look for that range to expand a little bit. Now, I say that, but again, remember the backdrop of the S&P. As we broke that 10-day balance, we really failed to get any meaningful range expansion. We actually made another 3-day balance up here, remember? So, technically, it should lead to expansion, but given the market conditions, I don't want to be overly anticipatory of that, right? We're taking it one step at a time and just looking to see if we can get the break of 369 or we trade back down towards that 362.67. Next up, we have the IWM. And don't let me put you to sleep because this is the same thing we've been saying for weeks and weeks and weeks now. If you've been watching, you know what I'm about to say. If you have not been watching, basically all we do is look at this in terms of the range. Where are we in terms of the midpoint here and smack in the middle of the range? This is not an ideal location to take new trades. Basically, your opportunity really lies up here at the high end and down here at the low end. Until we get there, it's a crapshoot on whether or not we move higher or lower. So again, more of a neutral risk signal right now. It's not saying be overly aggressive. It's also not saying be all out bearish. So again, IWM more as a sentiment gauge, absolutely neutral risk. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into our Apple chart here, you can see that we've broken our support trend line sideways through time. So we're just going to clean that up by getting rid of it. And of course, after that, what we're left with is kind of this pennant pattern, right? If I do something like this and then also like this, you can see we're consolidating nicely into this triangle after an extremely bullish move. And what did I just draw? Of course, a bullish pennant. So we're looking for follow through to the upside if we can start to trade over this resistance trend line, which is loosely in there. I'd probably argue 150, the psychological number, is the more important figure to be watching. So watching for blue sky breakouts over 150. The chart does look phenomenal. Again, nice expansion of range there on Thursday with a consolidation inside-ish day there on Friday, holding up definitely in the upper third of that overall range. So that strikes me as bullish. Again, looking for the 150 breakout into blue skies. Underneath us, we should be looking at 148 as support. And then, of course, as we know, if you've been watching intraday, we talked about this last week as well, 146.50 has been acting like a magnet. So if we do, fail to break out here and trade lower, I would really keep a close eye on that as support. Technically, from a daily perspective, again, remembering that that's kind of a loose support trend line here. If you just look at this, right, so here is a major low. This would be a higher low, higher low. This would be a higher low. If we consolidate and support above 146.50, that would also be a higher low this time. So that's kind of my line in the sand for bullish outlook here on Apple from a longer term perspective, right? So underneath that, what starts to become into play is this 144.31, simply because remembering that was the prior all-time high. If I just zoom it out, you can see this cluster of wicks up there. So I do think we should respect that from a technical standpoint if we see any sort of deeper pullback, if that breaks. Next up is, of course, 141.69. But as the chart sits, it definitely has a bullish look and feel to it. Good volume on that breakout too, increasing from the consolidation that we were seeing in days prior. Checking out Netflix now. This one really hasn't gone anywhere in some time, remembering that this is the range to be paying attention to. Our critical moving averages are mixed up kind of in the middle and have been acting as resistance, at least on Friday there. So to me, the direction just isn't clear here. The inverted hammer would make it seem like, sellers are trying to take a stand. It was a failed breakout from the buyers. But again, being in the middle of the range, I wouldn't really advise that you look for lower and or higher. Rather wait until we get to the bottom and or the top for that opportunity to start to arise. those levels are going to be at 524.77, and to the downside, of course, here we have 505.75. The midpoint is right around 515, we'll call it for round number's sake. After that, if we get the breakout, let's say the Qs really start going, they follow SPY into all-time highs, we're looking at 533.81, and then again, if it really gets going, which given the current market conditions, I'm not expecting a massive breakout, but your next major area to pay attention to would be 544.70. To the downside, we have 500 psychological underneath, where I would probably be looking for support or any kind of reversal candles to be printing, simply because, again, the Qs at all-time highs, it would just make sense to have more of a bullish outlook on the market as opposed to a pessimistic bearish outlook. Taking a look at Tesla, I thought this was interesting. It really felt like it wanted to go there on Friday in the Discord. We were looking for that move up into about 750, but it just didn't happen. So just further consolidating in this range, it doesn't strike me as overly bullish or overly bearish. I don't think it's the end of the world that it had a fake breakout, but again, the fact that the Qs are stuck in that range, maybe that's got something to do with it. So again, keep a close eye on the Qs to act as sort of a leader to tell you if you should be, favoring bullish tech or rather just neutral as it starts consolidating. If it starts consolidating further in that range, I would say the same would apply to Tesla, right? If it consolidates, look for Tesla to stay in between 724 and down here around 694, okay? So a little bit of a range there, right? It's about a 30-point range, so maybe look for hammers to form off the bottom for an opportunity to go long, back up towards the top, but until we really start getting out of this multi-day balance, right? How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days of balance, just like our S&Ps. I would argue this is actually cleaner balance than the S&Ps. But regardless, until we get out of this, I wouldn't be looking for, those home run plays, really big momentum plays like we've seen in the past here in Tesla. Again, your over is 724, 750 would be the target after that. And then I'd argue coming into this high here around 780 would be the next major area to pay attention to should we get going to the upside. On a rollover, support trend line is intact. We did technically make a new higher high here, so the support trend line is a buy. Stop loss goes underneath, looking for the reversal out of it. Could coincide for super support at 694. Be on the lookout for that. If not, and it breaks, you're looking at 667.53. Moving averages will be there to meet it as well, so that would be another potential long scenario if we get any sort of hammer candle that forms. Stop goes underneath, long over the highs. Retarget, again, your areas that we just discussed here as well as here on any sort of bounce. So continually just leaving Alibaba's chart as is. It's an absolute train wreck. I don't really see it being worth discussing in terms of levels to pay attention to. It likes to gap and trap. It likes to gap and go. There's really no rhyme or reason to this thing right now, so please treat this as intraday trades only. I would just make note that we did fill this gap underneath. There's a new gap overhead, so if I do something like this, gap is between 193 and 194.81. We'll clean this one up, get rid of that. Excuse me, and get rid of that. I wouldn't really argue. Maybe pay attention to this as support here at 186.67. But again, day trade setups only. Look for small momentum trades. Not looking for massive follow through, but maybe early morning bull flags, bear flags. You take them for that second leg and just bail as soon as it starts to show signs of weakness. So Facebook also kind of balancing here, not full breakout mode, not full breakdown mode. I will say it tested the bottom end of the gap on Friday, so make note that the gap still exists over 365.50, fills up towards 367. We'll call it the whole dollar. Again, keep a close eye there for potential reversals. If it does roll over, looking for a move into the support trend line. And at this point in time, given the nature of how many touches we've gotten into it recently, another touch in close proximity, in my mind, would start to make this feel like more of a flush point. So when that breaks, look to fill up the triangle. Of course, our next point here is at 356.75. If it goes, 50 SMA should be on your radar, just like it is with the Qs. To the upside, obviously, if we don't gap in reverse or gap fill in reverse rather, then just look for continuation into those all-time highs close to 375 and then blue sky levels up above. Until the Qs really get going out of their balance, I wouldn't expect much out of these primarily tech names we cover. So NVIDIA will be an interesting one this week simply because they have earnings on Wednesday, I believe, yes, after the market close. So keep an eye on that, right? This could act as a catalyst to move tech in one direction versus another. It's the last big name to report. So again, something to monitor for. What I will make your attention to is the fact that we have some support like this. It's not the cleanest thing. I probably wouldn't treat it as a buy point, here, but what I'm trying to illustrate is, of course, that we have major anchor low here. This is certainly a higher low in here, higher low in here. So the trend certainly clearly is up, and we are making higher highs, on the way, right? That's certainly a higher high from what we had in this general area. So trend is clearly up. You don't want to fight that just yet. We're looking for this to come back up and revisit our 208.73 all-time high in here, and then potential breakout, new higher high would then afford some sort of pullback, right? We talk about that all the time in the midweek market update. So for now, NVIDIA looks good, right? Reversing out of this higher low, hammer candle on Thursday, some follow through on Friday. Let's see if we can get a pre-anticipatory earnings run up into those all-time highs, which we discussed around 208.75. Again, if we go from there, you're looking at blue sky levels, $1.5 intraday levels that do form. I wouldn't quite be trying to time a top on this one. With options, please be careful trading around earnings. The Friday expiration will likely have massive pumped up IV, and then it'll all get sucked out once the announcement happens. And you'll, even if you got direction right, you might be left with a loss simply due to the loss of implied volatility, which pumps up the price of premium. So be aware of that if you're an options trader. Otherwise, chart does look good. Uptrend is intact. This was a nice healthy pullback back here. Overall, again, it does look good for more upside. And Microsoft here, perhaps the leader of tech, breaking out of its long-term balance up above this gap after failing to fill it on this day here. Again, I think this is pretty pivotal. These are the little nuances that you like to pay attention to. When it got down into the gap, it failed to fill it. It reversed right out and consolidated and held that for a number of weeks going forward. So to me, all this pent-up energy needs somewhere to go. We're looking for that range double to the upside. If we just scrunch this chart up and redraw that in, just looking for that rough eyeball target, I would argue it's probably up around here, 295. So watch out for 295 inside of Microsoft as an upside target. A little bit of ways to go, but again, a nice intraday scalp there could be available if we get some sort of pattern off the bell on Monday morning. So watch out for that. After that, you're looking at blue sky levels, $1.5. I would imagine 300 starts to act as a magnet if we get anywhere close to it, just based on psychological reasons. Now, on any sort of back tests of this area here, this 290 just about, start looking for hammers, right? It would make sense that if, the Qs remain in their balance or even start breaking out, then this should act as support on a backtest. So backtest goes here, stop goes here. If it takes out the highs, boom, you're trading up towards that 295 and 300 target, which we just discussed. If we do decide to come back into the range, one thing I would point out, again, this is based on a daily close. If we close underneath the range or just intraday, there's high tempo. The Qs are moving lower as well. The obvious target on a look above and fail, as we know, is the top of the range, or bottom, of the range here at 283.80. When we get there, start to monitor very closely for sideways consolidation just above, because as we've discussed with multiple charts now, if we get here, fail to make a new higher bounce out of it like that, then I would argue that boom, the next test of it should break. And in this case, we do have a tradable gap. This is not just the target here from 283.80 down to 281.50. That's certainly enough meat on the bone there to take the trade for the gap fill. After that, 50 SMA is moving higher and will be your support in between ranges here. Again, just like the Qs, we have not tested it in some time, so it should act as support on that first touch. And last but not least, the beast, we have Amazon, and kind of a big disappointment here, just going sideways after the earnings gap down, even coming into that 200 SMA, but supporting for now. So not the end of the world. I would remind you that the 200 SMA is kind of like the godfather of SMAs. So keep an eye on it. If it breaks, there's really not a whole lot of market structure to nitpick from in here. Maybe you get a level at 3,200 just about, but really the target is this prior pivot low at 31.32. And we know, just looking at this structure right here, that that's a weak level, right? Very, very technical level there. If it is breached, I would expect lower, and probably for Amazon to just go into this 3,000 round number, or this prior shelf of support at 30.25, we'll call it. So Amazon could be a, quite the bear case if it does truly break down and see some momentum here. I'm not sure that's the case, but again, that's all dependent and hinging upon a 200 SMA violation. For now, it is holding as support. To the upside, what is our sort of target on any reversal? Obviously, just the bottom of the gap, which is acting as a pressure cooker top. 33.90.50 is the level to beat. If we get up and over it, you're looking at this intermediate zone here at 34.30, 50 SMA after that, and then gap close is probably up there at 35.81. That's a huge range to trade, right? So I'm not saying it gets there all in one day, but that is what you need to be on the lookout for if we take out that gap low. Quick reminder to hit the thumbs up button and subscribe if you have not done so already, and let's get into these trade ideas. First one is on SONO for Sonos Inc. And what we're looking at here is a simple inside day bar setup. All we have to watch for is over and under levels. That range set on Thursday is going to mark the over and under. So over 39.26 moves to where? Well, looking left on the chart, I would argue it's likely we come back up into these highs close to 43.41. Now again, monitor intraday. I'm not saying it has to get there all in one go, but the bullish outlook is over. 39.26. The bearish outlook, of course, is underneath our 36.18, the low of that larger red candle. If it breaks, we're looking for it to probably come back down and revisit this support trend line. Let me map that one out for you. That's coming from here, doing something like that. You can see a number of touches have respected here again. So if we get a break, you're looking for something like this. Not a huge bearish trade, especially given that we saw a little reversal here, but simply, a quick play to the downside to watch on SONO. Not interested in either trade. If it violates and let's say it does something like this, what did we just do? Well, as we know, we've talked about it on the channel a ton. That's a look above and fail. Target is the bottom end of the range, and the same is true but opposite for the downside, right? If we break down, fail back up, the target is of course the top of the range up here on that look below and fail. Next trade idea is going to be on KO for Coca-Cola, and this one is very simple, right? Just a daily pressure cooker top up here close to, if we grab that other tool quickly, do something like this. Let's clean that up. Clear drawing set, yes. And we will draw that in here around 57.32. If we can take it out, I would argue you have that intermediate true all-time high in here, 57.56. But over this zone sort of deal, you get the idea. We're looking for blue sky territory breakout, right? So it looks good. The fact that we're touching all of these wicks, the pullback was met with buyers. Nice breakout, some momentum on Friday. We'll see if that can continue, and we can take out that zone for some more upside. Blue sky levels, whole and half dollars, maybe even 25-cent marks here on something trading sub 100. Not so interested in the trade if we, I would argue it has to remain, for me at least, to have a more bullish outlook above this 56.75 mark. Next up, we have BA for Boeing, and what I'm watching on this one kind of closely is this resistance trend line. It's starting to act as a pressure cooker top. Basically, as you know, whenever we get multiple touches in close succession to a resistance trend line, we start to watch for a break, right? So the fact that we've come up from the bottom, we're starting to pull back a little bit. Any sort of higher low in here that comes in to retest, you're just looking for the break, and the way you trade these essentially, you just look for the next peak. You do something like this. So you have a couple of targets to watch out for here. But BA, some more structure has to build out. We do need to see that higher low form and then a retest of the resistance trend line. That would be ideal. But that's, what I'm watching here on Boeing. So hopefully you can watch it too. Obviously down below, we want support to hold at 231.48. If we start to fail underneath that, I'd say the 200 SMA might act as that higher low. Really want to see how that price interaction happens there. If it gives up the 200, not so interested in the bullish breakout over the resistance trend line. Next up is MO for Altria Group. These guys make cigarettes, I believe. But what we're looking at here is a simple gap overhead. We have this nice move, continuation on Friday after a 2-day consolidation bull flag, if you will. So any test of 48.93 does have the potential to break and fill this gap up above to 49.33. So, a little bit of meat on the bone. I'm not entirely sure how the options move on this one, but it's something I'm monitoring. If we get continuation after that, the clear target is up here in these highs, just putting a level to them, grabbing that other tool first. To make you aware, that's kind of around this 50.64, 50.50-ish mark here on MO. Not so interested in the trade if we, fail to get any, except, like, let's say we do something like this, right? Wick through and then close back underneath. Not interested in the trade, right? Basically what that's telling us is we get a gap fill reversal, and if you want to be bearish, fine, it wouldn't be my first choice, but you could technically target the low end of the range. We have support here at 47.53. Next up is ARK. Okay, this is Kathy Wood, her innovation fund, or innovation ETF, you can see up there, and it's simply a consolidating symmetrical triangle running out of room, right? If we do something like this, you get your support trend line, you get your resistance trend line that looks like that, and how much room do we have left? Not a whole lot. Looks kind of like it wants to break to the downside. Not going to say it goes that way, just looks it for right now, but until we get a break one direction or another, that's when you know what direction to go with. Targets to the upside first, you have this here at 125, or let's just round that to 126, then of course this pivot up here 131, and to the downside, I would argue this is what you need to watch out for as a target to make this trade really worth it, around 114 the whole dollar. After that, maybe you get something here at 107.75. Again, watching to see how this one fares in its symmetrical triangle. Next up is PENN. We brought this one up in last week's video, but I thought it was worth mentioning again that we did just put in another data point here at the 50 SMA. So any reversals back up into it, if we test it one more time, I would imagine that's the time it's going to break, especially since the 50 SMA is right here now. So that would be two pieces of resistance breaking. If it goes, again, I could see, if momentum remains high, easily coming up to 79.38 in a one-day trading session. You can see we do get some solid days of momentum, right? Even on this 3-day move here, that's a pretty solid range to trade. So I do think PENN should still be on your radar. This one is not completely gone yet. As you can see, this lower wick did not violate that 50% mark, which we mentioned in the last week's video. And then the last trade idea, this one I clearly remember as a trade idea from a Discord member. So thank you for bringing DLTR to my attention here. And it's very simply a, range. I mean, look at how well defined this thing is. A number of weeks, I would argue, almost a couple months now, stuck in this balance as it's building up energy, so on and so forth. You have to imagine it's released in one direction or another. With earnings as a potential catalyst in the upcoming future, I could see it filling the gap right up to here. So let's put it level up there. The gap is going to close right around 106.78. 200 SMA is still sloping upwards. So it's not going to act as total resistance as we get there, simply because that moving target will be moving higher. So let's see if 106.78 is the true target. We are putting in a bit of a daily bull flag here into the end of the week. Nice move off the bottom of the range, and now a couple of days of consolidation, easily holding up in that 38.2 range. Just for exercise sake, we'll go ahead and map that in there. So doing something like this, you can see the 38.2 is the first blue line, and those candle wicks are certainly respecting there. So it looks solid, looks healthy in terms of consolidation and pullback, looking for the bullish breakout of this long-term balance. Not interested in the trade if we sort of come back down and trade underneath the blue 50 SMA line. Again, earnings are a catalyst around the corner. Keep an eye on that. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget that we have the midweek market update that comes out on Wednesday. We also do the crypto report on Fridays. And that being said, I wish you all a green trading week.